I'm going to talk about China and inflation and what's the result of that, which is recently the rise of gold price. This is the disclaimer. You can read at your pleasure. So first, I send you a chart. This is one of my Chinese friends sent to me. It's about a couple of weeks ago. And those people who don't know Chinese, can you guess what metal this is? Okay, I'll show you. It's called magnesium. Okay, and then this is the price. I got it latest, it came down a little bit. And you can see it's like had an explosive rise. What does this magnesium use is used in the automobile to make the car lighter and stronger for the steel, okay? Even with the chip shortage, even with the reduction of automobile production, the manganese price still spike. Why? Because 90% of manganese is made from China. So Chinese has basically absolute control of the manganese. And then when China had a rolling blackout about a month ago, this just went through the roof. So I just show you another two diagram. This is a long term. To the left is the steel. To the right is aluminum. Okay, steel is more violent, as you see. It jumped from where it exploded in the past year. Okay, but aluminum it went up a lot, but compared with steel, it's proportional and not that high as steel. But it's very interesting if you see the next diagram. That's when the jar just dropped. The iron ore. Iron ore price collapsed. Iron ore price collapsed. So I have a steel analyst calling me like a month ago. He said he never seen that in the past decades, because usually when the steel price goes up, iron ore price goes up. But why the iron ore price collapsed? And if this is a couple weeks ago, so now it's below $100. The reason behind this is China cut about close to 30% of the steel production, okay, and in the name of carbon neutral, okay, so that's an excuse, but they cut almost 30%. And then so China is the largest steel producer in the world, so that cut the worldwide steel by 15 to 20%. And that's what we have, is something extremely unusual. The steel price went up, the iron ore price collapsed. So, and then this is another diagram. You can see the famous Baltic Dry Index. And then we know recently we have a lot of blackout, a lot of boats staying outside Long Beach in California. But immediately it collapsed recently in the past months. It's cut in half ever since China started the power outage, rolling blackout. So this is the general scene, okay? So it seemed to me, it's pretty solid. It's not seem, it appeared very clear to me. China is creating the inflation. One of the inflation is from China, the key inflation. You can see that what happened is after a few months, right? They waited for Biden for a few months, see whether there are any relax of China-U.S. relationship. If there's nothing happen, so that's where they start to tighten the screw. So the excuse is the carbon quota. They say, okay, we need to keep our carbon quota. So what they're going to do, we cut down our steel production, we cut down aluminum production, we have rolling blackout in the factory, so they will ship less to the United States, but at a higher price. That's the key, it's a higher price. In the Chinese steel industry, in this year, they probably will make more money in the past 10 years. Why? Because their output went through the roof, their input dropped under the floor, right? So the margin went extremely high. So that's in general. Steel is just an example, manganese and all the other, and plus anything that China produce, okay, China dominate, will getting expensive this year. Including one of those in the metal, the zinc, China is the largest producer. Silver, China is the top 3 producer. Gold also a very high, one of the top producers. So all these metals China produce will get expensive because they're producing less. Before, we have 2 deflational force in the past couple of decades. One is technology, one is China. So what happened since trade war is the Chinese completely changed this year from a deflationary force to an inflationary force. Okay, so that's the biggest change. And also, another consequence is there will be windfall of profit. The Chinese trade surplus is going through the roof. So they're enjoying a lot of huge profit. I can see it's coming in the next at least 1 or 2 years. Because it takes about 5 years to build a new steel mill, and then maybe 10 years to build a mine, right? So it takes a long time to production to catch up. Okay, so here is the outlook for China. Right now, there's still some COVID lockdown from time to time when there's 10 cases, 5 cases in China, they lock down the whole city. The housing market has been slowing down. And then you heard a lot is the Evergrande, which I talked about that in the last Metals Investment Forum, but it changed completely last week. As you probably heard of it, Goldman started to heavily invest in Chinese real estate market. China, because they heard something. The thing is China started to change their policy a little bit. In the past 5 years, they're trying to slow down the real estate bubble. And a lot of companies having very difficult time, including Evergrande. And it seems China changed their policy in the past week or 2. That's lead to a huge rally of the real estate company. And then our friend like Goldman, who knows China very well, they already have some important information. They already start buying. The filing came out last week was Goldman Sachs was buying a Chinese real estate bond. So that actually seems to be okay for now, okay, for the real estate. But it's slowing down. It has been slowing down for a long time. So also, on the other hand, right, so China going to have a windfall profit. As I told you, from anything China produce, the profit margin just expand almost exponentially. So there will be a lot of surplus in the next year or 2, at least a year or 2, maybe longer. And also, Xi will enter his 3rd term. He usually likes stability as he entered. So there's a couple of forces fighting. There's weakness and then there's strength. Okay, so there's a lot of people say, oh, what China looks like. Okay, so I've just putting out, it's a famous Indian painting, that tell you, you look at all the different sectors, different areas, you can get very different conclusions. But I want to see my conclusion. What I see is China already started to smooth the housing market, right? So it started to support the housing market a little bit. So it seems like the Chinese housing market already started to bottom in the past week or 2. They were likely to cut interest rate to stimulate economy next year. There will be huge profit for Chinese company for the next year or 2, at least. They will enjoy a strong surplus, and then there's very likelihood Chinese currency will appreciate in the next year or 2. The really question, the key question, I've been talking to my friends in gold and silver for quite some time, was where are they going to park the surplus? China, historically, they park the surplus in the U.S. Treasury bond, right? With this trade war, you put the trade war hat on, I'm not sure they will do that. Probably very unlikely they will do that. So are they going to put some money in gold? That's a question. So there are also rumors they are, but if China put money in gold, I would say they will do it very secretively. And you probably can see from some trade data, how gold flow from Swiss to Hong Kong, so on and so forth. But they will not announce it, right? They won't announce it until they finish buying. So that's the thing we need to pay attention. So this is the long-term chart of Chinese currency. You can see it's consolidating. I think it's probably go higher next year. So put a chart of the gold in the past 20 years. It's very nice, and you can see gold went up 2009, and then come back, and then it's about to break out. It's again, this is about a week old, so now it's a little bit higher now. So this is the S&P. S&P, the chart looks scary. But I personally, I'm not a short guy, so I wouldn't short the market, but this is a freight train. I don't know how high it will go, but one day it may be like this or like this. One day it may happen, but I don't know when. So this is a very interesting chart. Okay, so I want you pay attention to this. This is a gold versus United States debt to GDP. You see, it has historically in the past 20 years, 30 years, has a very strong correlation. Gold seems to follow the debt to GDP ratio, usually trading at a little bit higher than gold and at the debt to GDP. Sometimes a lot higher if we have a lot of liquidity in the market, okay, except the bear market, okay, except the bear market. So we're about here. If you look at the chart, compare historically, gold can go much higher. Gold can easily go to this area, right? If you compare now with 2008, 2009, 2010, gold can go much higher even to this area. So that's potential upside. And I see there's a very good consolidation, right? Gold have a very strong pullback this year, and then just touch the debt to GDP, that support line, and then start going up, which looks very strong. So this is a chart I put in last Metals Investment Forum, was virtual. About 2 months ago, I was comparing this year, which is a year of tapering, versus 2013, which was also year of tapering. And I was looking at it, my conclusion was when the Fed announced tapering, that's the bottom of the gold, and we should all in. So that was a couple of weeks ago. Actually, it's a week, yeah, time flies, a week or two ago. So, and then this is just a general global liquidity. They have a lot of historical liquidity into this, much higher than 2008, and then still start to taper off in the coming years. So this is a beautiful chart. It just happened about gold. It just started breaking out. This is silver. Very, very good chart. I mean, you can draw any way you like, and also I like a platinum. It's a very nice chart. So, I just want a brief comparison with this year and then 2013. As some of you may know, 2013 I sold most of my gold. Okay, I kind of move on to energy, to other sectors. But this year I feel it's quite different, because the United States, the debt to GDP is much higher than 2013. And then in 2013, there was very little inflation at that time. But this time, the inflation is quite different. As I discussed earlier, the inflation, especially goods produced in China, has been going up dramatically. Okay, so I was when the Pfizer vaccine first came out, right, last November, I think I talked about in the Metals Investment Forum presentation last November, be careful of a vaccine. So when that happened, I sold gold. I was buying all these cruise line, movie theater, etc., and energy stock, etc. So I sold those already, most of those, and I rebought gold about a month ago. So this is my outlook. So I think it's pretty clear to me that anything China produce will be bullish for 2021, 22 next year. Okay, I particularly like silver because this year has been an interesting year if you follow silver closely. The solar panel, the hope of solar panel was never realized, right? Because there's a component shortage. Next year, the situation will improve dramatically. There's a massive order from Chinese government to install solar panel, part of their goal to reduce the carbon footprint. And the solar panel is about 10% of the silver demand. And according to a report by CNN, that need to increase by 25-fold. But if you think about 10% times 25-fold, you can use all the silver of the earth, right? It's still not enough. So I think all the things are aligned. The chip shortage should get much better next year. The component shortage much better. And so there could be a huge year for solar panel, and then could demand for silver. Silver also used in the chips as well, if you recall. So for gold, right now, the short term, right now it looks like a short covering. There were people found shorting gold into the tapering. They think gold will go down because the tapering coming, because of the interest rate raising coming. So it seems the gold is short covering. I see the short term, I think we go very likely to rally to the Chinese New Year. Okay, the seasonal trade. And afterwards, I have to take a look, see where the market is. And I'm also bullish on the precious metal group, the platinum, especially for the automobile production, should start catching up next year. The federal balance sheet, I only have like 2 or 3. Copper is very interesting. This year we have a deficit. Next year we could have a small surplus, but after next year will be interesting. So, but again, the copper is used in all these solar, wind farm, and then the electronics, and then the battery EV automobile. So I see it remain high. The zinc is very interesting. You see, zinc has a huge spike when China has a power shortage, because China is the largest zinc producer. And when their mine and smelter stop working, the zinc price going high. And I see potentially zinc can go even higher. It's very interesting. I was talking to one of the CEO here at Beaver Creek. He was thinking to hedge zinc at here. I said, at that time, I think zinc will take off at least 160, the high, and they did. So, but I think right now has a pullback. It could go much higher. So we have I have a minute or two left. So basically, this is what I talk about. I'm not, really the gold bug, but I'm investing in gold and also invest in other sectors. So I want to get in at the best time, and then if gold really goes down, I see gold will go down. Like last year when the vaccine came out, I would tell people to sell gold and get out for a little while, and then try to get back in at the lower price. And I see this, but again, that's for the gold, GDX, GLD, gold future, and major miners, right? For the juniors, it's a different story. I think it's very exciting, juniors. And then we have a tax loss selling coming very soon. Okay, so that's a very good opportunity. I see gold and silver initially rally to the Chinese New Year of 2022, and afterwards have to reassess. And then I see base metal again. I talk about a little bit elevated base metal. Okay, so let's go down a little bit because I don't have much time. So at Stock Pickers Market, and then this is my website, and I partner with my good friend Jay Taylor here. And I start with junior mining. That's about 20 years ago. As my family portfolio expand, I focus on other area as well. I have mining, I have biotech, I have energy, and then so on and so forth. So whatever can generate wealth. Okay, so a lot of my subscribers are wealthy active traders and as well as quite a few hedge funds.